5 completely different crises. Great Depression, 89% stock crash. 1970s stagflation, inflation destroyed bonds, tar savings. 2008 financial crisis, 10T wiped out. COVID crash, 35% in 3 weeks. 2022 bear market, growth stocks down 70%. 5 different crises, 3 positions survived all of them. Not 4, not 10, 3. The same 3 that worked in 1929, worked in 1973, worked in 2008, worked in 2020, worked in 2022. Warren Buffett has 30% of Berkshire 325B in position 1 right now. Central banks buying position 2 at fastest rate in 70 years, 1,000 plus tons annually. Position 3 delivered 10% annual returns for a century straight despite every crisis. The 3 positions, position 1, cash and treasury bills, deflation crisis protection. Why it survives, optionality, capital to deploy when others can't. Liquidity when markets freeze. Great Depression, cash gained purchasing power, deflation. T-bills paid 3 to 4% while prices fell 25% over 28-30% real returns. Bernard Baruch held cash deployed 1932-33, wealthier by 1936. 2008, Buffett held 40 by cash, deployed into Goldman, 5B, GE, 3B, Buffett, 5B, made tens of billions. COVID 2020. Bill Ackman held cash, bought 27 Maller credit default swaps, paid out 2.6B, immediately deployed into Starbucks, Hilton, Lowe's at 40-50% discounts. Doubled in 4 months 2022. T-bill yields went 0% to 5%. Made 5% while S&P fell 18%, 23% outperformance. Now, Buffett holds 325B cash T-bills, 30% of Berkshire, largest ever. Sold 50% of Apple, not buying anything. Pattern before every crash. 2007 held 40B, 2008 crash came. 2019 held 120B, COVID came. Now 325B. Positioning says crash coming. Position 2, physical gold, inflation, currency protection. Why it survives, can't be printed. 5,000 years is money. Protects against currency debasement. Great Depression, fixed 2067 Oz until 1934. FDR revalued to $35 or 69% overnight gain. Wealth preserved during crash, gained during devaluation. 1970s stagflation, gold $35, 1970 to $850, 1980, or 24x gain in decade. Only asset that thrived during inflation, 8. Gold $850 to $700, initial crash. Then Fed printed 1.5T. Gold to $1,200, 2009, when $900, 2011. More than doubled from lows. COVID 2020. Gold 1,550 to 1,450s, March panic. Then Fed printed 4T. Gold to $2,070, August. 42% gain in 5 months. Now, central banks bought 1,000 plus tons annually. 2022, 2023, 2024. Highest 3-year total since 1950. China, 1,000 to 2,000 plus tons, likely more unreported. Russia liquidated treasuries, bought gold. Poland doubled reserves. Turkey, India, Singapore all accumulating. They see 36T US debt, inevitable money printing. Gold hit 2,700 2024, all-time high. Position 3, S&P 500 Index, long-term growth. Why it survives. Ownership in 500 largest US companies. Earnings grow over time. 10% annual returns for century. Great Depression, S&P fell 89%, 1929, 1932. But by 1945, back to even with dividends. By 1950, doubled. By 1960, quintupled. Recovery lasted 30 years, 970s. S&P flat 1968, 1982 in nominal terms. But 5-6% annually with dividends survived. Then 1982-2000, 17% annually, greatest bull market ever. Those who held through 70s captured 80s, 90s boom. 2008. S&P fell 57%. OCE 2007 or MAR 2009. Recovered by March 2013. Then 2009-2020, 400% return. 100K invested 2009, 500K by 2020, COVID 2020. S&P fell 35% in 23 days, 3,400 to 2,200. Recovered by August, 6 months. Hit 4,800 by DEC 2021, doubled in under 2 years. 2022 S&P down 18%, but 2023 up 25%. Those who held captured recovery. Pattern. Over any 15-year period in history, S&P never delivered negative return. Always recovers, always new highs. The allocation, based on age. Under 40, 20% cash, T-bills, 10% gold, 70% S&P, time to recover from crashes. 40, 60, 30% cash, T-bills, 10% gold, 60% S&P, balanced approach. Over 60, 40% cash, T-bills, 10% gold, 50% S&P, more conservative, can't afford 50% loss.